And on the commodities market update segment, Fumi Adebowale, a member of the FDC think tank, will take us through some of the burning economic issues and, of course, other developments in the domestic commodities market space. Hello, Fumi. Thank you very much for joining us.
Thank you for
All right,
having
let's begin with what you have there on your burning economic issues. MTN issue, of course, is there. And then you quoted RENCAP saying that Nigeria needs to increase its investment as a percentage of GDP to 25% to achieve sustainable growth. So how does that relate with MTN listing on the Nigerian Stock Exchange?
Yes, one of our burning issues is the fact that Nigeria has completed its conversion from a private company to a public company. So, and this is like a prelude to its listing on the Nigerian Stock Exchange. So we expect MTN to list by introduction, that it's going to list its already existing shares without new issue. So this is a positive development in the sector because we expect this to increase market cap by at least 13%. And this should send a positive signal to investors. So now this is a form of investment, fine, it is good. Nigeria currently our investment as a percentage of GDP is about 13 to 14%. But for Nigeria to attain sustainable development goals, just like RENCAP has said, we need to increase this to about 25%. Let's look at countries such as China. Currently, China's investment to GDP is about 40 to 42%. This is a good one. And if you look at the GDP numbers, it's growing at the rate of about 6.9%. Nigeria, where are we? We are still growing at about 1.9%. So for growth to improve and for this to translate to an inclusive growth where all citizens will benefit, then we need to increase our investment to GDP to about 25%.
All right, let's look at other issues there. Exchange rate has remained stable and the external reserve has been flat, at over $44 billion. And recently, oil price has traded to as high as above $70 per barrel. Now, what would this mean for the Naira?
Yes, the good news is most of these indicators are showing positive signals. For instance, we've seen the exchange rate stable at 360 at the parallel market. And this is because the CBN has continued with its intervention in the forex market. At least in April, we've seen the CBN intervene for about 4 to 5 times. So this is good. This is strengthening the currency, which is good for Nigeria. Also, oil prices has been increasing. So with the stable exchange rate and increase in oil price, we expect our external reserve to start increasing, and this is a good one for us, even in terms of oil revenue, which is also good news for the government. But the thing is, the negative impact of this will be on the landing cost of refined crude.
Yeah.
So, and this means that our under-recovery will have to increase. So it's going to weigh on Nigeria's under-recovery.
Yeah, with this rising of
in oil price.
The landing cost may just go up as much as 180?
Yes, 180 naira per litre. So.
Now, this brings us to the issue of fuel subsidy, of course, which has reared its head over time, and recently the IMF advised the federal government to do away with fuel subsidy. Now, it's like, which way would the government go? Is it doing away with the fuel subsidy or probably devaluing the Naira?
Well, like you said, the IMF suggested that the government should do away with the fuel subsidy. But before the government can take this bold step, there has to be some measures that have to be put in place. And it also has to be phased out gradually. It shouldn't be like an instant thing. It should be a gradual process.
What kind of measure? Like the refineries? Dangote refinery will soon come on board.
Yes. Yes, it's going to come on board, and we expect that to help to reduce our import of refined oil. So we have to allow that kickstart. Let's see the impact of that. Then gradually we'll begin to, phase out these subsidies in the medium to long term. Because just removing it immediately, we'll have to increase the fuel price of oil, and that's going to affect the purchasing power of consumers, which is not good at this point in time when consumers are even asking for an increase in minimum wage.
Anyway, what's your short to medium-term outlook for the oil market as it is now? Yeah, as of yesterday, 74, or rather this morning, around $74. Yeah.
Yes, currently oil price is trading at the rate of $74.5 per barrel. So in the next 2 weeks, we expect prices to continue to trade at this range due to tightened global supply. Though we are think there has been a concern that Saudi Arabia will have to increase oil production. But if this happens, it could limit the impact on oil prices, but that will be in the medium to long term. But in the next couple of weeks, we expect prices to still trade as high as $74 per barrel.
Okay, let's quickly look at the agri-commodities. You put up an outlook there. You noted that grain prices will decline further due to robust supply, sugar prices to be bearish in the coming weeks due to lower global demand, and cocoa, lower rainfall in Ivory Coast likely to reduce output and mount pressures on price. Now, just a quick one. What would this mean for companies that use, these commodities?
Yeah. Okay, yes. A decline in the price of these commodities is actually good for companies that uses this commodity because that was going to reduce operating costs. And if that happens, we expect even price of domestic commodities to also decline. So this is a good one. But in part of cocoa, a decline in price of cocoa is not that good for Nigeria because we export this commodity. So that means we're going to see a decline in our revenue. But for other importing commodities, it's a plus.
All right. Thank you very much for your time, Fumi.